Welcome Investorholics and friends to another ETF Spotlight review. Today we will be looking at IAA, which is the iShares Asia 50 ETF. This one's hedged in Australian dollars. So over the long term, I think Asia could be a region that delivers good economic growth, which should be helpful for the underlying businesses that we're going to look at in the iShares Asia 50. IAA provides investors with cost-effective exposure to 50 of the largest companies in Asia, the established Asian markets, if I can get that tongue twister out. So if you're looking for some exposure to Asia, stick around. I think this one will add some value to your research. Hey there, Investorholics. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. Okay, let's have a look at iShares Asia 50 ETF. The fund aims to provide investors with a performance of the S&P Asia 50 index before all the fees and expenses. The index is designed to measure the performance of the 50 leading companies listed in China, Hong Kong, Macau, Singapore, South Korea and Taiwan. The index consists of 50 leading blue chip companies that are drawn from the 4 major Asian markets, which you just mentioned. The index is a float adjusted market capitalization weighted index, so including only the largest, most liquid equity securities domiciled in the 4 aforementioned Asian markets. So it's actually quite concentrated, I think, anyway. I mean, you're going to get concentration with just 50 companies in the portfolio, but something to it's country focused as well, which reduces diversification, but also gives you exposure to the, I'd say, probably some of the best, if not the best, future leaders in driving global economy anyway. So definitely one to have a close look at. Not that I would be too worried about owning it, just because it was so condensed anyway. So we had a net asset value of $17.03 when I did the research, trading just above that at $117.97. Market cap, this is probably the biggest one almost, I think, in this presentation anyway, $863 million. Management costs is not too bad, 0.5%. You get a distribution which is semi-annually in January and July. Dividend yield's not too bad. I mean, it's not, doesn't shoot the lights out, but it's pretty reasonable at 3.58%. Because as I've kind of said with some of these other reviews, these type of ETFs, we're in these for the growth, not the dividend. So we're looking for higher growth opportunities. So having exposure to only 50 stocks, the fund exhibits significant concentration levels in terms of stocks and geographic exposure, sort of kind of what I touched on before. So IAA is the largest exchange traded fund in the Asia X equity segment. So kind of mentioned that as well. Holding only the largest stocks in Asia, the fund carries a tilt towards large caps, which have outperformed the other market segments. The fund feeds into the US domicile version of the strategy. So pretty much what this does is if you look at the holdings, it buys the US version of this. So whatever it is, IAA or whatever it is, it's listed on the NASDAQ, I'm assuming. That that sort of reduces any paperwork, because previously there was a lot of paperwork associated with this, owning this ETF, but not anymore. So yeah, you definitely get exposure to, or cost-effective exposure to the 50 largest companies in Asia, and I mean that's definitely can't be a bad thing, because those companies and these regions are going to be driving global growth and demand in the coming 20 years or 30 years or wherever it's going to be. So BlackRock's iShares business is one of the global leaders in indexing and possesses expertise in tracking and trading efficiencies. So also have a look at VAE and ASIA. They're definitely ones worth a closer look as alternatives. We also always should be doing our research and looking for alternatives, because the first thing that we see may not be the best. Okay, so we're looking at Tencent, Taiwan, Alibaba, Samsung, AIA Group, top 5 there. The rest sort of tails off a little bit. So since inception, we had a 8.17% performance, which isn't too bad. So if you'd invested on the very first day, your $10,000 would now be over 28,000, so up 182% or thereabouts. Performance-wise, if you'd invested in the last 12 months, you definitely would have seen some massive uplift. So if you bought 12 months ago, you'd be seeing 32%, which is pretty phenomenal in 12 months for an ETF. So PE, we're looking at 22.3. So that's quite high for the PE ratio. Anything over 20 these days, I think, is a bit on the expensive side. Price to book, we're looking at 2.47 times, which I think is sort of telling me it's a bit expensive as well. Historically, this ETF has been a strong performer, outperforming the equity Asia Pacific ex Japan Morningstar category benchmark MSCI AC Asia ex Japan index, effectively consistently over its lifespan. So there hasn't really been a time that's dropped in below there. Most of the outperformance came in the past 3 years. The coronavirus pandemic has caused considerable upheaval in the markets, and like I said, that's what I sort of pointed out, that 32% before, particularly during March and February of 2020. We're sort of sitting here in May now, so you'd definitely be, if you'd bought 12 months ago, you'd definitely be looking at some pretty healthy gains. Despite witnessing a sharp correction, the fund has now recovered all its losses and stands positive. Like I said, you run at 32% in the last 12 months, not to be sniffed at if you actually got in at that time. So Morningstar thinks that this share class will be able to deliver positive returns above the category benchmark index. So Morningstar give this ETF a bronze rating, which is pretty good. Bronze is like 3 out of 5 stars. So it's in the middle, but these ones always have a lot of risk associated with it. I think that's probably one of the reasons why it's not a silver or gold. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. expand your investment horizon and crack your financial sky. Thanks, guys. See you later.